Go ahead and start and get things going.
Am I wrong in speculating this? If you chase more often than not, you'll be rewarded, or maybe just recently, like on days like today, you would just short. And a lot of the days, you have these some days where there's like midday.
All right. Amy, are you still there?
Yep.
All right. Excellent. All right. So, welcome to the stream. For those who are joining, we're going to do something a little different today. Everybody hurts. And so, we're just going to sit here. I got the Discord comms open, and we're just going to talk it out. Amer's doing a lot better than I am this week, aren't you, Amer?
Not today.
Not today? Well, you weren't
No.
short?
Haven't mastered the art of
Yeah.
chasing.
So,
Yeah.
just post in the chat what hurts you. First, though, I don't know if you're going to be able to see this on Discord, guys, but I'm going to treat myself to something. Pepsi Nitro. Have you guys tried this yet? I talked about this in the chat. This is something new from Pepsi. This is a really good flavor. Vanilla draft cooler. By the way, sound, is that okay? I know Discord can hear me. Trading View. How many people we got on there? We got a few people. All right. So I'm going to pour it in this glass right here. This is one that was given to me as a present by a former love. You can't spell awesome without Wes. So that's what she got monogrammed here. Now, here's why I want to show you this. This is really cool, these Nitro Pepsis. You're going to be able to hear it on, if you can't see it on the YouTube. So if you're on Discord, go to the Trading View and stuff. Watch this. It's kind of cool. So there's a trick to it. You have to, it tells you right here, chill can, pour hard, admire and enjoy. So I'm going to pop this. It's going to be loud, and then it's going to pour, and it's going to be like a Guinness. Okay, so here we go.
Oh, I'm missing the best part because I can't find it.
I told you, turn on the video. So this is incredibly delicious, by the way, because it's like a vanilla. They make the regular, but it's nitrogen instead of CO2, which gives it a the foam looks like a Guinness, doesn't it? That's because the consistency of it is like a Guinness. So enjoy. Cheers. That is so good.
The can looks like it's tractor fuel, though. Not gonna lie.
Do what now?
The can makes it look like it's some tractor fuel. Like it's not very.
Tractor fuel? Yeah, because of the
Yep.
color.
Yep.
All right. So normally I sit down, I have some topics, but like I said, I'm going to relax and we're just going to talk. We were sitting here at the end of the day thinking maybe we could get the NASDAQ down to minus 5% at the close, but man. All right. What's going on? What were we talking about earlier, Cole? What were we talking about? Remind me. I was going to run rants about something.
A few things. Let's think. Let's pick one.
Dog the Cat asked, was this the worst April in history? I don't know. Let me bring something up real quick. Someone shared to me this statistic right here. Let me bring this up. This is average stock market returns, and April is supposed to be one of the best month, on average 1.51%. And then May is there. And then now you see the phenomenon of sell in May and go away. Perhaps we should have sold in April. I don't know. Overall, this is like max despair. And so I have to think that possibly that's a buying opportunity. Now, that's not saying I bought anything today. I'm pretty as long as I want to be. I'm kind of nursing more the ego wounds of Google and Amazon. I think my thesis was just wrong. The pre-split hype was not enough to account for bad earnings in this earnings cycle. Things are just getting hammered, punished for bad earnings. Yeah, STNE, James. I think you asked it in Discord earlier. We'll take a quick look at that. You remember what we were talking about, Cole?
We were talking about so many things I kind of forgot, honestly.
Yeah, I told you to save it for the live streams we chat about. We'll get into it. I'm gonna enjoy some more Pepsi. Hang on. Oh, it's so good. That's good. That makes it feel better, actually. So on this STNE, generally what a lot of people have been asking me this week is, everything's like so low. Surely it's at a low. I think Teladoc was another one. And what I want to see on these stocks making new lows is like in this STNE, where you had earnings, popped it up, and it pulled back and had a chance to hold on March the 31st, and now it's just selling off, coming back down to the bottom. Now, you could say, okay, maybe we're going to get a double bottom here, but if you look at the character of this and a lot of things that just kind of sell off, more likely it's just going to come down, make another low. What I'd like to see in this case is for you to basically conquer that 15, because now you're back under 10. Now you're getting the single digits, and look, a stock can always go lower, as evident by this week. So,
don't be mad at me. I did buy that double bomb, and that was like.
What'd you buy?
Except Facebook.
Oh, Facebook.
850. I just bought it. I was like, I'll leave it. I don't care. Yeah. So far it's going good, but I've also
okay.
Yeah, I've cheated my
speaking of
system.
Teladoc, Cathie Wood. What are our thoughts on Cathie Wood? I think she's an interesting prospect.
She's hurting, I'm sure. The thing about Cathie was she did an interview in December. Let's just bring up ARK. She did an interview in December. I need to go back and find it. I've mentioned it a couple times before. And it was December, yeah. So it was somewhere in here on her ARK funds. And in the interview, she said, after periods of Cathie's great performance, they're typically followed by underperformance. And she was literally warning people that her style of trading was very volatile. And when I heard that, I thought to myself, well, there's a real trader being open and honest about their track record and how they trade. But I don't think people really listen to it. And I think a lot of people are surprised. I think ARK funds are down 27% in April alone. Where's my hold on. What do you think about it, Cole?
I think a lot of these great fund managers, there's one like reoccurring theme that I seem to pick up on it, and it seems like they all have one great pick that everyone knows them by. Either they're the Michael Burry Bear or the Cathie Wood, Tesla. So it'll be interesting to see how she performs over the coming years. Is she just going to be, that one-hit wonder, or is she going to perform?
Well, I made this meme myself, like at the beginning of the year when things were starting to kind of fall off, talking about inflation. She actually said, and this is holding to her thesis, this is her words. She tweeted this. I don't know where the tweet is, but in our views, fears of inflation will give way to confusion and fears of recession during the next 3 to 6 months. She was right. If so, the rapid growth rates of truly innovative companies, many of their equities maligned this year, should be rewarded handsomely. Well, that's the big if, isn't it?
Mm-hmm.
So
yeah, I feel like these ETFs, they have like a mix of really well-known companies, Google, Tesla, like Cole said, but they also have these like really, really, really risky companies like what was that one? Like Roblox. She's pretty big on Roblox, and the other one.
Is she still in Roblox?
Yeah, like these companies that are like not, they might have a plus 60% over the year, or they might just go down 20%. Like they're very volatile. You know what I mean?
oh my goodness. I mean,
And they kind of just
look,
mix
there's
and
a
match it.
reason. There's a reason that these all IPO'd in 2021, and you haven't seen any IPOs this year. Like the people that IPO these things, they're really smart, and they're smart enough to know when the market is wanting to buy everything, and it's
Oh yeah,
no
that is kind of
accident.
true. They're sneaky.
It's almost like a game in itself. The IPO game is never for your benefit. It is for people that were early investors, or
Yep.
angel investors.
Yep.
Anyone that's not you, basically.
Yep. That's exactly what it is. And so now, it's giving up the IPO lows. Roblox is interesting though.
That is interesting. How many IPO? I would be interested to see that metric. How many IPOs we had in the last 2 years versus this year?
How many IPOs in 2021? All right, Google brought that up. New record listings. There were over 1,000 listing. 59% of them were SPACs. And then how many IPOs in 2022? Last year was a record year for IPOs. 18 companies that have gone public in 2022.
And still, Discord didn't manage to go public.
Discord didn't. I don't think they need to. Would I buy Discord? I would. I would be one of those people that would forego my normal IPO hesitancy, and I would just go ahead and buy TradingView IPO and Discord IPO. I really feel like probably you have to imagine that Discord has been approached by lots of big players and they've turned them down. They have to. You look at Microsoft. I mean, they bought Skype, and who uses Skype anymore?
True. It's an interesting company because it's a public forum.
Discord, yeah.
Yeah.
I mean, it's. I love Discord. It's amazing.
How do they make money though?
The server boost and I pay for a subscription. I pay for a subscription so that I can have very good quality. Like you get it for free, but with the server boost, what are the benefits? I think it's you get better quality to begin with.
You can't live stream if you don't server boost.
What's that,
in the Discord? So like in this Discord channel that we're in right now, you can't live stream to us if you don't server boost.
Yeah, that's a big reason, and I support it for that reason. But there's also uploading files. You have a file cap limit if you notice if you try to post like images and stuff like that on Discord, and so that goes away if you pay. So you can use it for file sharing if you have a paid account. And little things like that, little value adds. That's how they support themselves. And also probably lots of VC. Oh yeah, Ventrilo. Who remembers Ventrilo? That was like gaming back in the day.
I don't remember Ventrilo. I know there
Yeah.
was.
I mean, no offense, but
believe it
you're
was
20. You're 20. What?
TeamSpeak.
26. Yeah. Ventrilo is something I was using 10 years ago. So yeah.
Mm.
So Discord does get paid by advertising. You can get your games solidified, unchangeable by users. What do you mean? Oh, where do I see a good entry point on Amazon? Well, funny you say that. I saw a beautiful, beautiful entry point on Amazon on March the 14th because this level right here, let's call it 2,700, is the halfway point between the COVID low and the all-time high. 2,700 is the 50% here on Amazon. And so when they announced their split here on March the 10th, I felt like I had missed it. So I waited patiently until it did a pullback from here to here to about 28.34. I made many posts about it because from like my analytical technique where I like to look for 50% retracements and things, it was beautiful. It was so beautiful. And so I was able to catch it here with very little drawdown. In fact, if you go down to the 5 minute here, it even gave a really good 50% setup there and then took it up here. Now, did I take profit? I did not because I want to own Amazon. And so now I'm a bag holder. I guess it's not a bad thing to be a bag holder of Amazon, but it's kind of making me this year's kind of making me realize you still have to be a little bit of a trader. You still need to go ahead and like this right here. I was talking about this earlier. So this is about a 20% gain on the stock. Okay. So you put in $100, well, if you had fractional shares and you make 20%. And so in my mind, I'm thinking, well, I don't want to sell for two reasons. Number one, I want to hold it through the split. And number two, I don't want to pay short-term capital gains. Okay. Good reasons, right? Well, from that point down to here, I'm now down 12%. So instead of like taking that 20, like say $100, 20%, I make $20 of capital gains. Maybe I have to pay 30% of that. So $6. All right. So instead of losing $6 to taxes, now the position itself is down $12. And that's why I hate capital gains. It's privatized loss, socialized gain. They don't give you money back if you take the risk and lose it. But no politics. But you got to get past that. So
Yeah, I wonder if the Buffetts take profit. Like
no, he
Warren
doesn't.
Buffett.
No, his favorite holding period, he'll say, is forever. And they accumulate cash. I'm not sure how they do it. They accumulate cash from dividends, which then I think they go and they don't reinvest it right away, but they build up a huge cash stockpile. What is Berkshire Hathaway doing? This is the weekly, and there's COVID. I remember there was a really nice So back in January, they pulled back to here about 296, which was a nice inflection point
yeah, that's
there.
beautiful.
And then once again, it was also a 50% retracement there. And then once again, it pulled back on February 24th when Russia invaded. And from there, boom. And now it's actually, look at that. I mean,
now that we're talking away,
real talk. I don't hate that. It would have been better if it was here, but it's coming back to this level right here. So that's interesting. But
sorry to cut
Go
in,
ahead,
but
go
I was
ahead.
going to say, on the topic of these big investors, I think it's interesting and also kind of telling when buying the dip that these guys who have been doing this for so long, who manage billions of dollars, are not impervious to catching a knife. We see that in things like Charlie Munger, buying the Baba dip. He actually sold out of his position. We also have Bill Ackman, buying the Netflix dip. These guys trying to catch these knives and getting cut, pretty bad still to this day. And I think it's a good lesson, to be careful.
100%. Yeah, the Bill Ackman is a big deal. I mean, I looked at this. I actually made a video about this when he did, and I was in Netflix, a little bit after it. Like, so he bought Netflix after earnings. I think his average buy price was somewhere like in the 360 or something. So he kind of caught this bottom. I came in when we had that reaction, because let's just pretend that we don't see this. This kind of goes back to that ST&E play. This is what I kind of want to see. I want to see that little buying reaction, and I'm going to try to grab it. Once we get this proof that you got a little bit of buying going on. Otherwise, you end up in a situation like Facebook, where it just Facebook can't possibly go lower meme. And when it broke, actually through here, I started getting out. And then when it finally, actually broke the thing, I'm completely out. Because at this point, from a technical perspective, it's invalidated the setup. And you had to be out at those points, even though what happens in a lot of cases is it gives you a little bit of a you got out too early, and then you end up with that. And so, yeah, Ackman he dumped it, because I think he's going to be based on a lot more fundamentals and probably risk controls as well. Like, they lost subscribers. That's not what he was looking for. But in perspective, he lost $400 billion, which is a big, big, big number. But he manages, $400 million. He manages 10 billion, so he lost 4%. So I think all of us have maybe perhaps lost 4% in the last few weeks, at least. So he is one of us. Yes. I think that see, a lot of people, they come to me and they ask me about these strategies about watching whales, especially in the crypto space. Like, they look for on-chain transactions as an analysis technique. That's been a big meme recently in the crypto space. They say, like, well, there's less on-chain transactions to exchanges, which means less people are selling, they suppose. Or they look for big wallets and what they're doing. Same thing goes with, looking for what these hedge fund people are doing. They're human. They make mistakes. Like, I don't think that I'm any smarter or dumb. Well, they're probably a little smarter than me, but they deal with just more zeros. So I'm right there with you. I mean, it is interesting to see, these right dogs. Warren Buffett, he took a huge loss on Heinz, I think, recently, but it just so happened in that year he just made a tremendous gain in Apple, and it all evens out. We're all traders, man. We're all doing the same game.
Yeah, exactly. It's just important not to get attached to your your favorite positions, and when you are not able to accurately predict where it's going, it's time to get kind of cut it loose.
Yeah, when your thesis is proven wrong. Yeah. Peter, thoughts on the S&P closing the week month with a double bottom? All right, I didn't want to do this. All right, let's look at it. So I typically do. I look at the futures, the ES and the Nasdaq. I know people use different things. So it's possible to double bottom. I've maintained since February 25th my analysis, and it's remained pretty static. So Russia invades Ukraine, literally blood in the streets. There's no reason for companies to be down. It's a mass psychological event. it makes sense that on February the 24th, we got this big dip. Okay. It broke what we had on the 24th, which was what the market was doing as a whole, but then it came back and it closed back inside the range. So for the purpose of, what it looked like here, there it seemed we had a double bottom, a spike, false breakout that I like to see. Came back and retested, and then we had this market-wide buying, this what looked like a short covering rally from March the 15th up to March the 31st. Roughly, end of March. So 2 weeks of buying. And then now here we come to now where we are testing that bottom once again. So punishing people that thought we were going back up to all-time high. Fortunately, I was not one of them. I know there were a lot of people that were asking me what to do when we came up to about right here. We were trying to get back up to like 44.80. And I remember very specifically because I was on vacation and it was knocking up against these resistances, and they're like, "Oh, I want to jump in." There's a lot of FOMO. Like from this point right here, just based on reading Discord and everything, these last few days right here were a FOMO rally. That was all people jumping in thinking they were going to miss the market, and it came really close if you think about it. But this is what the market do. Couple things that, again, I'm still looking at that February the 24th low. I mean, just from a standpoint, when that low is broken, you need to get out. I mean, there's a perfect example of that. I hate to look at it, but Google on April the 22nd, it broke its lows. I held because I like Google. I have a lot of Google. As a trader, I should have sold. And then, when we had this earnings dip down, this right here could have been avoided if you just get out when something breaks a major low. Now, if you're an investor and you want to have the company, then you're just going to ride it through. But from a trader's perspective, this is why we put our stops below these key lows. And you would have avoided a good 7%. Now, it can come back, but it can also keep going. And there's a lot of examples that I like to bring up here where, there's Zillow. I use this example all the time, still got it annotated, where, I got in on this pullback to the 50%, and I got out when it broke it back in July. And now, holy crap. Like, the problem is this: if you don't get out here, when do you cut your losses? Because when I've been using this example, week in, week out, when I talk about taking losses, I talk about it. And like here in November, when I was talking about it, it was down 45%. The beginning of the year, when I do these live streams, it's down 53%. Now, as of today, it's down 61% from the point that I closed it. That makes me feel better.
I feel like I have this issue as well. I sort of want things to go my way, but what I should be doing more is just looking, observing more than just observe what is the market doing. It's kind of selling, and you look at signs, not just is it going down. Like you look at signs, for example, buyers are getting rejected here, buyers are getting rejected here. Like this thing is going to carry on going. And for me personally, I sometimes close too early or try to long something that's going down. What I pretty much need to do more is just observe what the market is doing. Instead of people would say, "Oh, trading is guessing." It's not guessing. You're sort of observing what the market is doing and trading with it.
Trend is your friend.
Trend, yeah, that's pretty much. I need to do that more often.
So two things specific to you. First of all, I love to watch you trade because you have no fear. But it sounds to me like you're starting to get that fear. So me, I trade with stops and rules, and you'll see me, I'll go in and I'll get stopped out of futures trades, right? By me watching you, what I take is that you're doing it kind of on feel, which means you'll get into something and you'll kind of wait, and then you'll get out when it goes against you. But you're very nimble. I like that. But you can do that for as long as you have like absolute mental like clarity. And I was listening to Chris Cole. I've become a big fanboy of Chris Cole. He's a guy that runs a fund in Austin, studies volatility. He talks about these 10-day meditation retreats that he goes on where he'll meditate for 10 hours a day. I don't think I can do that, but I mean that he basically frames it as we are mental athletes. That's what we are as traders.
That's a great term.
Yeah. And so we're constantly having to take in information, stressing ourselves out, with emotions, and we have to be strong against it, just like you'd be lifting hundreds of pounds of weight. And so meditation, good. I need to do it more. So what you need to do, Aimer, for that is you have to be very mentally strong. So you're starting to notice like, hey, I need to train myself to recognize something. That's what you're basically recognizing. I'm with you there with being with the trend. I mean, clearly the trend has been to be short. That's why I love our friend Nefarious in the chat, or Kentucky hedge fund manager. I love that he is a perma bear and he is getting to run circles around all of us optimistic folks. Now is his time because he's been focused on being bearish. There's been many days where we're sitting here looking at futures, and me as a contrarian, I'm constantly trying to. I didn't trade anything after Monday this week. Monday and Tuesday, honestly, I'll admit it pissed me off. I had a great entry. I had a Valhalla contract that they took from me. I caught the bottom on Monday right here, and I kept that runner contract all the way up. And then they came back the next morning and took it from me. They killed my soldier.
Yeah, I mean, like that example, when you see it going down, it's like, is it really just a relief rally and it's going to go back up?
Yeah.
Or is it going to carry on going down? You need to like observe sort of more. That's what I need to do, of course.
And in hindsight, you sit here and I'll sit here and say, okay, well, you really wanted this contract to go ascend to Valhalla. But when it came down, to here, okay, it's finding support. But when it broke there, should you really had it, Wes?
Yeah, exactly. That's what
and then it's sort of like, well, what about when it came down to your 50% level that you like, and it broke here? Should you really carry it all the way to break even? I mean, that's where I had my stop, was at break even, and then boom, there it goes. It died. But did I need to do that? And that's it. No, I didn't. But I had hope that I was catching a nice bottom, and then now here we sit. But the thing is, like, I'll sit here on these days and I'll think to myself, well, if I had just said, okay, this is a very bearish day, let me throw in a short contract and do anything else. But it's hard. It's difficult to, you can't see the future. But yeah, I find it very easy right now to short crypto, because I have been fundamentally bearish crypto since November, when this thing just failed to go any higher. And so I have no problem being short Solana, which I am, and completely hedged delta neutral and everything else. Speaking of which, Ethereum, this is a big deal right here. Actually, we had this April the 25th bar that came down to a support, held it, and man, it is just I basically, I'm using the spike indicator as sort of a line in the sand. If this spike, which normally I would take as a reversal, triggers the stop, then that's going to trigger a breakout to the downside. So really, if this weekend we get a breakout below this range right here, watch out. And if we start getting down to these levels, if we start retesting these lows, it could just very well break them. You just don't want to see that happen. So, but my mindset for months now has been crypto is in a bearish cycle, because I've seen many of them before in the last 10 years. That's what we're in right now. I could be wrong, but that, Ethereum came up and held so firmly, and the whole market turned on Ethereum at 3,500. It just validates that thesis. But on the flip side, with the stock market, as I said earlier, with the S&P 500, I've been operating under this thesis that, okay, the Russian invasion FUD was the low for now, thus bullish. But now here we are coming back down to retest that low. So it didn't let you get long and stay long from any of these points. So yeah, that was me rambling. So hey, welcome back, Mike.
Oh man,
You're
Crazy.
on the live stream, by the way. You want to talk about your? I was just talking about
No.
talking about crypto.
later.
So yeah.
Yeah, Cole said this to me the other day. It's like what did you say? Performance sport. Yeah.
Oh, you mean like day trading is like a performance
Yeah.
sport?
Yeah, it's got to be mentally 100.
You do.
Well, trading in general, but more so intraday is a lot of you show up every day, you don't get paid unless you perform.
And you lose money sometimes. These last couple of weeks have made me really appreciate people that have salaried occupations for sure, because this is all that I dedicate myself to doing, and it sucks to not have validation. I mean, I had 2 good years just like everybody else, but then this year it has been tough, and I must
Well, it's
adapt.
kind of one of those things where you hear a lot of times people that want to get into trading, they will often ask, how much do you make a day? And that's just the wrong question.
Oh, it's so wrong. It's cute. It's so cute. And well, I mean, it's not only just like cute, it kind of borders between cute and asinine and wrong, because if you aim for a certain amount a day, you're going to put yourself in a very precarious position to shoot for that psychological goal and really hurt yourself. So when people come to me and they say, I'm trying to make $500 a day trading, I immediately stop them and say, no. You take what the market gives you that day, and you're happy with it.
Talking of mentality, I've been really big like the last week of fixing my own mentality. Like I think being just green, like I don't care if you're up 1 point that day, you're already like above what's that statistic that City won? 79% of day traders who are pretty much losing on average.
So interesting thing
that should be the goal. That should be the goal.
So interesting thing about statistics, you can look, because you trade CFDs in Great Britain, right? Whatever you want to call it, country. Yep. You can see they have to publish a profitability report. Like that's legally they have to. And so you can look and see your brokerage, how many people are actually profitable.
Yeah, like 20%,
Right. So I think that's pretty accurate. And then you also have to factor in that, that's 20% this year. So like how many people year over year are profitable? I bet it's, what I bet it is? I bet it's a Pareto distribution down to that. So I bet that 20% of the people are profitable by their report, but of those 20%, 20% of those are profitable consistently. And so what does that come out to be? What's 20% of 20%? That would be 4%?
Oh, yeah.
Yeah. So 4, yeah, you know what? Honestly, that sounds about right. I'd say 4 to 5%. And honestly, like, I know that a lot of people like tried to get me to do it, but like teach classes and sell, what I do. I can't guarantee that people are gonna make money, as that's what keeps me from, trying to monetize. I mean, I could teach a class like any other guru, but the guru, in order to get people to take your class and pay you, you have to be like, all right, do you want to make $500 a day trading? I'll show you how. And you have to come with that kind of like confidence to instill in people. And I'm just not going to do that. I would say, look, I'll show you what I know. It's up to you. And you're probably going to fail, at least in your first year, maybe even second year. It may even take you, it took me probably about 5 years before I could say, like from about 2013 to 2018. And then the beginning of 2018 was brutal, but I made it back, fortunately. And then I kind of felt like I was doing good. But yeah, 5 years, I would say, before
I
I
think
finally
there's a
felt
lot
like
of
I got it.
deceiving information online in terms of, because I remember when I started trading, I would look up, and see how long it took people to become profitable. And I think that there's a lot of times it's bad to ask that question in markets that are like 2020, 2021, for example, because the sample bias is going to be, oh, of course I'm profitable. It took me like 6 months or something, but it's, can you do that over time, basically? Can you keep that up?
So
Isn't like right now the hardest times to be profitable?
well, it's just not a bull market. It's so easy. Everybody's a genius in a bull market. I was browsing YouTube and this thing came up and I had to click on it. He won. It was, my crypto strategy did 100x, and I was like, okay, let me see what's going on. And basically, he was going through his last 2 years of crypto trades, and yes, awesome, good job, buddy. How's that working out today? I was working out with a friend today who is very, very knowledgeable in the DeFi and DAO spaces. He's very, very good with keeping up with these projects, and he was talking about this Keeper DAO that just came out, and I asked him how that was going, and he was just very like, oh man, like I've been following that, bag holding it for a year. When they finally released it, it was up 9%, but it's back down to the red again. And I said, well, look, man, it's not the market of the last 2 years. And no matter how smart you are, no matter how good some of these projects are, people are not feeling this risk on mentality that was, again, we look to the IPOs. The reason they put the IPOs out there is because people were just foaming at the mouth for things to throw their cash out. Now everybody's scared, and it's a vicious cycle. But that's just the markets.
Yeah, I mean,
Great.
Dr. Chelsea, not short, all in on tech since December 3rd, 2021. Entire portfolio down 4.95%. That's good. Yeah, QQQ down 23.5%. Not sure what type of wreck everyone is talking about. Also, we don't day trade, not diversified, 100% tech concentration, mostly old school tech. IBM, Cisco, TXN, deep in the money, covered calls, right? Very nice income and barely down. Next week it's time to start closed. What it moved. Next time it's time to start closed over the short calls. Good. Also earn 4 months of income, which is 3.92%. So only down 1% and still have all the holdings. No worries, smiley face. Saw it coming January 1st. Really? You kind of losing me there. Deep in the money is the gold standard for bear markets. Okay, cash and bottom fishing are also good. Well, I'm happy for you if all that is true. I think that one of the reasons you are in a very good situation is because IBM, Cisco, TSCO, and TXN are somewhat value plays. They actually produce goods and services that people want and have really good, solid, uh, mature balance sheets. Whereas a lot of when you say tech, a lot of people look at the speculative tech. So yeah, I mean, that's a great strategy, to have these companies and then sell uh, premium against them, because there's a lot of liquidity, and yeah, you don't have to sell your stocks, and you earn premium on them. So that's really great. That's good. It's a good strategy. Nothing wrong with that. As far as like seeing it on January the 1st, uh, here's why you kind of lose me there. Actually, by the way, I invite you to come join Discord and share your strategy as you go along. But January 4th of this year, Manaconda and I, we talk a lot. That was this day right here. It doesn't look like much, but our portfolios were up about 5% on that day. Which, again, that's one of those kind of like, well, wow, like it was up maybe 5% 1 or 2 days in 2021 total. This is a weird event. That's odd. In hindsight, we probably should have done something, hedged, taken profit, etc. But we just didn't. And I'm going to remember that. You know, you have days where you have downside volatility, but you also have to worry about the upside volatility. That's the market telling you something. If you're up a bunch, believe it or not, it's not because you're like, you don't want to assume that you're super freaking smart. Okay. You don't want to assume like, oh, wow, I deserve this. This is great. No, you are unbeknownst to you exposed to some volatility, because if you're up, your whole portfolio is up like, more than 2 or 3% in a day, you've got something or some things in there that they're very wobbly, and well, your volatility cuts both ways. What's interesting about that day in particular was it was Apple hitting perfectly. I think I can remember what it is. It's like 182.83 or something. It's either three or whatever it is, $3 or $4 trillion market cap on January 4th. It was such a beautiful hold of that level. If you look at it, it's like ping ping, the $4 trillion market cap. That was where the market topped out. And I don't really think that on January 4th, when Apple was doing this, when the stock market was still going, anyone really could honestly say, this is the top and all this is coming. So let's see. Dr. Chelsea says, also the premiums have been going up each month. Well, that's because volatility has been going up. Rollover third week. Well, I have an email to one of Canada's largest brokerage houses where we requested complete move to cash the last week of October 2021, and we requested all cash by November 2nd, then redeployed cash in December and did it under the guise of covered calls. I can provide confirmation of this. Cheers. Okay, good. AMAT, ADI, Intel, IBM, INTC, double Oracle, TXN, Western Digital, but don't need to lay it out. Well, I mean, those are value plays. So you got out of speculation when the market was frothy. Very good. I myself kind of avoided all that. I just don't like to be where people are screaming about. I really don't. I'm a contrarian, so that's very, very dangerous, very, very dangerous position to be in. So, but yeah, thanks for sharing that. I've actually got a friend that contacted me this week. I was talking about beforehand. He is very into real estate, and he's looking to diversify because right now, at least in the Atlanta market, the house prices have come up so much that used to, if you owned a house as a landlord, you could pull about 25% return on capital a year based on the value of the house and the rental that you received. Now, because prices of houses have gone up so much, and it's hard to get rentals, like house prices have almost doubled in the last 2 years. But I mean, what can you do? You can really only go up on rent maybe like 5%, maybe 10%. People are going to be mad. So you haven't been able to keep pace. So now real estate, being a landlord of single family homes, is giving you maybe like a 5% return on capital. And so he's looking at that as, well, I can take this capital, I can put it into stocks, maybe even dividend paying stocks, and then sell calls against it. And like you said, making about, 3.4 months and 4 months, almost 4%. Yeah. So it makes a lot of sense that, you can put it into stocks, companies that are good, and then earn premium on it. And now with the VIX as it is, yeah. Oh man, VIX poked above that high right there. Yeah. Also, this is the first time I got the chance to catch your live stream. You're quite articulate and quite interesting to listen to. Thank you. Well, thank you. Join. I don't charge for it. Just I want to hear more about your strategy. Hop on the Discord if you can, or shoot me a line. I honestly was not going to forget the. Oh, well, thank you very much. I warn you, young lady, I'm very susceptible to flattery. I honestly didn't want to do this because I am not in a very nice, happy cash generating portfolio. But you know what? My nice friends, they talked me into it because and they're making me feel better. So thanks, guys. Amer, you still there?
I would
Go ahead.
I would look at 37.5 on the VIX. I feel like if we were to break over that would be significant.
I agree, and it corresponds with the premise of the February 24th low. Because what kept me bullish, what keeps me bullish, is that volatility is not going higher. And really, when we had that Russian invasion, and which you would think that would create more fear, you would think that the market would price in more, made a new low. VIX did not go higher. That was a divergence that I took as very meaningful. And then when it made an even lower high here on March the 8th, and we did a little pullback, I was like, okay, go. And so what you see here off these, lower VIX numbers is you see that late March rally in the stock market as volatility declining. Now, all that has kind of gone by the wayside as the VIX keeps climbing higher. But yes, I mean, what you would see if we did break that February the 24th low, it would stand to reason this VIX is gonna blow past these highs. And one of the things that I like to look for is like daily and weekly closes, kind of validate things. Right now, it's kind of in a no man's land, but there's no real sign that this is going to abate. There's no sign that this is going to go down yet. We'll see, because VIX is definitively going higher, and so that does actually indicate that we could see more. Scary. So, yeah.
I mean, we did make a new low, but the VIX didn't make a new high. That's
Well, you're looking at the Nasdaq. Yes, the Nasdaq did make a new low. Yes, it did. Tech heavy, but I just to pick something to go off of, I am watching the S&P 500. That's the line in the sand right there, about 4,100. We shall see. So, man, everything got creamed today. Like even the best, like Coca-Cola, doing pretty well. Costco. Ooh, Costco's like it's really giving up its high. Look at that nice little double top up there. In fact, I actually do recall that Costco has been throwing me spike alerts for the last 2 weeks, and I've just kind of let it run. But yeah. Yep. All right, we're gonna start wrapping up. Anything you guys in the chat want to look at, put in just chatting on Discord or here. Zillow destroyed you. Great. I'm sorry, James. April 29th note. I noticed for the first half. Is this in your journal, Dr. Chelsea? I keep a journal too. Very nice to keep one. I noticed for the first half of the sell-off today, the VIX continued to drop. The indexes and the VIX were down most of the day. The VIX climbed in the later day, but the divergence is significant. The market is bottoming. The process is almost complete, in my honest opinion. The QQQ did not make a low today. 312.60, which did not break the low from April 28th after hours, which was 311.88. Quick note, what I prefer to do is I look at the futures, honestly, with like QQQ and things like that. because now I'm kind of confused where you're getting 3-1. Oh, well, yeah, okay, it's -0. Because they trade all night, so I try to look at the futures. It's going to be the same thing, but I don't like the after hour stuff. We may break this, but it will become a pivot point. Then at some point we'll cross back over the pivot point and head to 320 again. And after 327, we are out of the bear market. All right, let me translate this into futures. So roughly speaking, 320, 320. Hold on. It's like we're speaking like two different languages, like French and German. They sound kind of the same because they're Latin based. It's like we're talking these numbers. So 320. Yeah, this NASDAQ sold off into the close today. NASDAQ broke. NASDAQ, basically the QQQ triggered what I would consider to be a breakout of the February the 24th. So we'll take that as a data point. 320. Yeah, here's the thing. You really kind of have to hope, and hoping is not a very good thing in investing and trading. You really need to hope this right here, come Monday, gets back up in here, and then this right here was just another one of these kind of a bloop. Because again, in recent history, looking at Google, so this was the kind of the line because I added to Google on the Russian invasion. Like that was the only trade I took on February 24th because I was, market was going crazy. Everything was down. I was like, what is the most convicted trade I have? I put in a call to my broker and put a position on in Google on February 24th. And so then on this date right here, April 22nd, we broke below, and I'm thinking to myself, wow, like my technical analysis rules say I got to close this, especially with earnings coming up because earnings are a flip of a coin. But I held. I'm not going to beat myself up too much for it because it's Google, but now I'm a long-term investor instead of a trader. I've got capital tied up in Google that could be perhaps being used in something else. But the key thing here is it broke these key levels, and now you see where it's at. So it sucks to close something out here or close something out here because it has essentially invalidated the long from the lows. But if you don't take that hard pill, now you're down an extra, or I'm down an extra 4%. And I don't like that. So that's that. But, back to the QQQ, excuse me, if we sit here and we say this is the only thing we're going to key off of if we're looking at the indexes, that this has actually broke the low here. We're just making lower lows. If these are sustained, at what point do you say, okay, well, this thing's going to stop? The answer, I'm going to look at it the same way I look at everything else. I'm going to go to the COVID low up to the all-time high and say, the next obvious level for QQQ to go to is going to be that 50% retracement at 286. And what this would represent, let's do the S&P 500 because when I look at statistics for corrections versus crashes, I usually do that. So I don't know the statistics on the NASDAQ. In other words, historically, what the corrections look like, but I know that a correction is 10 to 20% on the S&P 500, which we have over 100 years to look at. So right now we're down about 15%. Let's call it 14.68. If we went down to here, now we're getting into the 27%. We're getting close to that 30% crash type of scenario. And honestly, that right there is a very, very solid level. You have that inflection there at the end of 2020 before it broke out in 2021. 3491, let's call it 3,500 SPY. And that would bring it down 27%. It's not even 30%. It's not even 30%. It wouldn't even classify as a crash. But yeah, we give up that low. I'm going to have to get bearish, very much so. So we have an inverted cup and handle when we broke in January 1st, 2022. We are now in an inverted cup and handle, inverted as well. This is the pattern that is only found at the end of bear markets. Okay. Also find the bullish cup and handle anywhere. They all fail. This inverted cup and handle we are in now will begin to fail. Then you load the boat. Traders will wait for the pivot, and after the Fed to grab this new bull market, this is about to start. That brings up a question. When's the Fed going to step in? Like I've been saying all week, I want them to turn the printers back on. So I've been waiting for that. I think if we started getting down into the next phase of this, people are going to start clamoring for that. And whether it's good or not, I don't think it's good. I think what we're seeing is a little bit of capital reallocation, a little bit of creative destruction. The market is basically sorting itself out. But yeah, I think that probably the Fed needs to stay away, but I don't think they will. I think if you did start to see us start to come down, this whole rate increase thing that they're doing, they might have to rethink it and make out some kind of announcement, and then the market will go back up because I've been talking about this with people for this week, and I'm going to start closing this out. Google Fidelity inverse head and shoulders trading pattern from Fidelity. I wrote the document, 40 years of research. Ooh, let me look that up. So Fidelity. You work for Fidelity? Is this identifying chart patterns with technical analysis? Which one am I looking at here? Fidelity low risk trades cup and handle contract in 2008. You had a contract in 2008? Oh, it's cute. This is you? Fidelity low risk trades. Is this it right here? Where it's got like a picture of bears and bulls? You got it. Okay. I like white papers, actually. I'm actually thinking about writing one myself for the spikes that I use. Somebody encouraged me to do that. Real quick, Glenn, can spike alert be auto triggered for all stocks? Do you mean can an alert be auto triggered? Yes. In TradingView, if you go to alerts, if you have this one, what you can do is you go down to the spike and you can set it up. And in fact, that's what you'll see, pinging on the screen, because it comes up. I have it go to the Discord under the alerts channel and all the spikes that come in for the ones that I watch. And I tell people all the time, if you have stocks you want me to put into that alert system, then do it. I don't mind, because I have almost 1,000 alerts that I can set into TradingView, and I'm using 447 now. I try to watch all the major crypto for these kind of events, because they can be good potential reversals, and I need to write a white paper about it so people understand. I will, Dr. Chelsea. I really appreciate that. I like reading white papers about trading. I'm going to be totally honest with you. Hold on, where to go? That I do not trade on chart patterns because I find them to be hard to quantify. I like to have very specific things to look for, and that's why I simplify things down to looking for a trend with a 50% retracement. But I will promise you this: I will read it. I will actually. I like to learn. I don't want to be willfully ignorant of things that can help. But I like to try to quantify things, and oftentimes what I like to do is code them in TradingView into some sort of indicator where it can then tell me, hey, come look at this. Because here's the thing that I kind of learned from my mentor years ago about looking at chart patterns. If you look at a chart too long, you will start to see things that aren't necessarily there. The issue I would have with it, and I'm going to read it. I'm going to try to absorb it. The issue I would have with something like this is that if I'm looking at it, how do I know? And maybe this is in your paper. Morgan Stanley out with a report saying most bearish since 2008, and we know what happened to them. Yeah, they're gone. Or no, they're still. What happened to Morgan Stanley? My issue would be if I'm looking at a chart like this. Let's just bring up a chart, and this is a crypto right here. I would have a hard time like saying like, okay, was this a cup and handle? Yeah. That's the thing. I'm not, like you said, I'm not sure what news you could introduce into the market to make it more bearish. Okay, so that's the thing. That's my whole kind of thesis for why February 24th is so important. Because February 24th, when Russia invaded Ukraine, it was a big psychological hit on the market. But it didn't really matter. So on that moment, you had this FUD, fear, uncertainty, and doubt, that pushed the market down to a certain level. Okay. Well, if we come to the next few days ahead and we break that low, we go lower and we have more volatility to confirm it, that means something else is going on. So I don't think it's I would look for like a news event like that to give you that flash moment of opportunity. But if you have a sustained downtrend, then it's I know secular is something that you have an orthodox bear trend, if you want to call it that. So that's why it's very important. It'll be amazing. Glenn says it'll be amazing if there's a filter list and then can appear like the stock screen function. I wish. Maybe one of these days I will learn some Python and build my own platform around this particular phenomenon. Until that day, I want everyone to have a great weekend. Big thanks to my close compadres, Amer, Cole, for helping me out. Thank you, Dr. Chelsea, for sharing some knowledge. And I'm going to read up on that this weekend. I am going to go and get some more exercise because we are all mental athletes as traders and investors, and you got to stay healthy.
Yo, thank you for the stream. Have a great weekend.
Thank you, Amer. All right, we'll see you guys next week.
I got really tired at the end. I kind of just
You dozed off. I put you to sleep.
Yeah.
Thanks a lot. I could have gone without hearing that. Now I feel sad.
It's all the mental strain, whole week. Time for a weekend now. But yeah, thank you very much for the
Take
stream.
it easy. Take it